Because some of the biggest fortunes in history were not built by predicting one perfect stock. They were built by recognizing when the world was quietly changing underneath everyone else. That is how ordinary people sometimes end up looking brilliant in hindsight. Not because they were geniuses, not because they had insider information, but because they saw a pattern early and got into position before the crowd understood what was happening. And today, something very similar may be unfolding again. A massive amount of wealth is already starting to move through the economy. And by the time most people realize what changed, the biggest early advantage may already be gone. That is how lucky winners are often made. So the real question is not whether this wealth shift is happening. The real question is this: will you recognize it early enough to benefit from it? Because once you understand what is moving, where it is going, and why it matters, you may start seeing the next decade very differently. Most people do not feel like they are standing at the beginning of a major wealth opportunity. They feel pressure. Everything costs more. Housing feels harder to reach. Retirement feels less certain. And every week there is a new headline telling people to worry about something else. That creates a very dangerous mindset. Slowly, people start believing wealth is a closed club, something reserved for founders, insiders, and families that were already ahead. And everyone else just works, pays bills, hopes for a raise, and tries not to fall behind. But history tells a different story, because every few decades a financial shift happens that quietly changes who gets ahead. Not overnight, not always dramatically, but powerfully. And the people who benefit the most usually do not look special at the beginning. They look normal. They are simply paying attention while everyone else is distracted. That is why this matters so much. If you think wealth is only about income, you miss the real game. Wealth is also movement, money changing hands, priorities shifting, capital leaving one place and rushing into another. You begin to see how an economy creates new winners. And once you understand that, the question stops being, how do rich people get richer? The better question becomes, how do ordinary people get into the path of money before the crowd finally notices where it is going? Because that is where this story really begins. Here is the first mistake most people make when they think about wealth. They assume big opportunities look obvious in real time. They imagine something dramatic, a crash, a boom, a once-in-a-lifetime headline, a moment where everyone instantly knows history is being made. But that is usually not how it works. Real wealth shifts often begin quietly. They look boring, slow, complicated, easy to ignore. And that is exactly why so many people miss them. Because people are trained to react to noise, not structure. They notice panic. They notice hype. They notice whatever is trending this week. But wealth is often built underneath all of that. A major shift can begin with things that do not feel exciting at all. Demographic changes, inheritance patterns, asset sales, changing spending habits, different investment preferences between generations, money moving from old sectors into new ones. None of that feels cinematic on day one. But over time, those quiet changes start reshaping entire parts of the economy. Homes in certain places rise faster. Some industries grow. Others fade. Certain skills become more valuable. Certain assets attract more demand. And the people already standing in the right places benefit long before the majority understands why. That is what makes a wealth shift so powerful. It is not loud at the beginning. It becomes obvious later. And by the time it feels safe and undeniable, a large part of the advantage may already be gone. So if you are waiting for perfect certainty, that may be the very thing keeping you late. Let's make this real for a second. Imagine a normal American family a few decades ago. Nothing flashy. No trust fund. No famous business. No insider access to Wall Street. Just two working adults trying to build a stable life. One has a regular job. The other works in a school office. They buy a modest home in an area that feels ordinary at the time. They contribute to retirement accounts when they can. They do not think of themselves as people building wealth. They think of themselves as people trying to stay responsible. And that is the point. At the beginning, wealth shifts rarely feel like wealth shifts. They just feel like normal life. A mortgage payment, a retirement contribution, a cautious financial decision, a little patience. But over time, the environment around them changes. Their neighborhood becomes more valuable. Their home appreciates. Their retirement accounts compound. Industries grow. Asset prices rise. What once felt ordinary starts producing extraordinary results. 20 or 30 years later, people look at that family and say, they were lucky. But from the inside, it never felt like luck. It felt like bills, patience, routine, and staying in the game long enough for the world around them to change. What really happened is that they were standing in the path of a large financial wave while most people were too busy looking at short-term problems to see the long-term shift. Now bring that forward to today. Picture a 35-year-old professional with a decent salary, a retirement account, and the constant feeling that no matter how responsible they try to be, real wealth still stays one step ahead. Rent is high, home prices are intimidating, retirement feels distant, and every major wealth story seems like it belongs to another generation. Then they hear about a huge wealth shift already underway. At first it sounds too abstract to matter. Then one question appears. What if this is one of those moments that only looks obvious later? Here is the big idea. This is where most people misunderstand the story. A wealth shift does not create millionaires only by handing money to heirs. It creates new millionaires because when a massive amount of capital starts changing hands, the effects spread far beyond the families receiving it directly. Money does not sit still. It moves. It gets invested. It gets spent. It gets used to buy homes, fund businesses, change portfolios, pay for services, and reshape demand across the economy. And that is where the real opportunity begins. Because if trillions of dollars move from one generation to another, or from one asset class to another, that movement changes the environment for everyone. It can affect which sectors grow, which cities attract more demand, which professions expand, which assets rise faster, which businesses suddenly solve more valuable problems. That means the opportunity is bigger than inheritance itself, much bigger. Some people will benefit directly, but many others will benefit indirectly. They may benefit because they are already invested, because they own the right kind of assets, because they work in industries tied to wealth movement, because they build businesses around changing needs, or simply because they stay positioned while money flows through the system. That is why this matters for ordinary viewers. You do not have to inherit millions to benefit from a major wealth shift. You have to understand the ripple effects. Once you see that clearly, the topic stops being about rich families passing down money. It becomes a much more powerful question. Where is capital likely to flow next? And how do normal people get into the path of it? That is the real question this video is answering. Most people hear the phrase wealth shift and imagine one simple scene. Someone passes away, someone else receives money. End of story. But that is far too small, because when huge amounts of wealth begin to move, the impact reaches far beyond the account balance of the person receiving it. Think about what usually happens when money changes hands. It gets reallocated. It gets managed differently. It gets spent differently. It gets invested with different priorities. It moves into different regions, different services, different assets, and different industries. That means a wealth shift can reshape an economy in ways most people never notice until years later. For example, if more money starts flowing into investment accounts, people who already own broad market assets may benefit. If newly wealthy households want to buy property in certain areas, housing demand in those places can rise. When money starts moving at scale, families do not just need accounts. They need advice, tax planning, trust structures, property decisions, legal help, care planning. Entire industries grow simply because wealth is changing hands. If older generations preferred one type of asset, but younger generations prefer another, capital can rotate and create new winners. That is why a large wealth shift is never just a private family event. It is a public economic event. And that changes the way the viewer should think about it. Because now the question is not only, will I personally inherit something? The better question is, what happens around me if large amounts of money start moving through the system? That is where things become interesting, because now the field of opportunity becomes much wider. A person might benefit because they are a homeowner, an investor, a business owner, a professional in a growing service sector, a worker whose industry expands alongside rising capital flows. That is the hidden power of a wealth shift. It does not just change who has money, it changes where opportunity concentrates. This is one of the most encouraging truths in finance. The people who benefit from major wealth shifts are not always the smartest people in the room. The people who win during major wealth shifts usually do not look extraordinary at the beginning. They are rarely perfect forecasters. More often, they are simply in position while other people stay distracted. Very often, they are just positioned. That means they are exposed to the right long-term forces, patient enough to stay in the game, disciplined enough not to panic, grounded enough not to chase every distraction, steady enough to keep acting while others freeze. That matters because most people disqualify themselves too early. They say things like, I do not know enough. I am not an expert. I do not have enough money yet. I missed the early part. I am not the type of person who becomes wealthy. But major wealth building periods often reward behavior more than brilliance. In the long run, consistency beats intensity, position beats prediction, and time destroys emotion-driven decisions. Think about the people who slowly built wealth through retirement accounts, home ownership, broad market exposure, or long-term business ownership. Many of them did not look impressive in the beginning. They looked normal. What made the difference was not that they were spectacular. It was that they stayed connected to productive assets while the economy shifted in their favor. That is a powerful idea because it changes the viewer's role in the story. Now, the goal is not to become some genius market forecaster. The goal is to stop being completely random with long-term financial positioning. To stop living only from headline to headline, to stop assuming wealth belongs to someone else, to stop waiting for perfect certainty. When a huge wealth shift begins, the winners are often the people who quietly stay close to the flow of capital. Not glamorous, not flashy, just positioned. And over enough years, that can look a lot like luck to everyone watching from the outside. When people hear the phrase new millionaires, their minds usually go straight to extreme stories. A startup founder, a celebrity, a trader who took a huge risk, someone who got impossibly lucky. But major wealth shifts usually create winners through much more realistic paths. Here are four of the biggest. First, long-term participation in broad productive assets. Some new millionaires will come from people who simply stay invested for a long time while large amounts of capital continue flowing through markets. Not because they picked one perfect company, because they kept owning productive assets while the environment rewarded ownerships. Second, real estate in the right places. A wealth shift can create stronger demand in certain regions and weaker demand in others. People who understand that geography matters may benefit much more than people who think all property is basically the same. Third, careers tied to wealth movement. This is the overlooked lane. As wealth changes hands, demand often grows for financial planners, tax specialists, estate attorneys, trust professionals, real estate experts, elder care services, and other businesses that help families manage transition. The people building skills in those spaces may benefit from the shift even if they are not receiving wealth directly. Fourth, businesses built around changing needs. When money moves, behavior changes. People buy differently, invest differently, plan differently, protect differently. That creates opportunity for businesses that solve new problems. So the next generation of millionaires may not only come from people receiving wealth, it may also come from the disciplined investor, the smart homeowner, the well-positioned professional, the operator who builds in the path of the shift, the ordinary worker who starts acting with unusual clarity. That is why this topic is so powerful, because it turns the word millionaire from a fantasy into a set of believable paths. And believable possibility keeps people watching much longer than empty hype. This is the uncomfortable part. Even if a huge wealth shift is already underway, even if it creates real opportunity, even if the signs are public, most people will still miss it. Not because they are lazy, not because they are stupid, because they are human. They wait for proof. They want the shift to feel obvious, safe, and fully confirmed before they take it seriously. But by the time something feels obvious, early positioning is usually gone. They get trapped in daily noise. A long-term structural trend can be changing the future while people spend all of their mental energy reacting to 1 week of headlines. They underestimate slow compounding. People are emotionally drawn to dramatic wins, but some of the biggest wealth outcomes come from ordinary actions repeated during the right period for long enough. They think they need more money first. This belief keeps a lot of people stuck. They delay good habits because they assume good habits only matter when they have real money. But by the time bigger opportunity shows up, the people who already built systems tend to be the ones ready to benefit. And maybe the deepest reason of all, they assume wealth is for other people. That belief quietly destroys long-term positioning, because once someone truly believes wealth belongs to someone else, they stop preparing for it. They stop learning. They stop investing. They stop watching where the trend is going. This is why a wealth shift is not just a money story. It is also a psychology story. The people who miss these periods usually do not miss them in one dramatic moment. They miss them in 1,000 small decisions to wait, postpone, delay, and tune out. And years later, that delay feels expensive. The biggest advantage in a wealth shift may not be money. It may be time. That sounds simple, but it changes everything. Because when large amounts of capital begin moving through an economy, the biggest winners are often not the people who get the most on day one. They're the people who can stay in position while the shift unfolds. That is a completely different way to think about wealth. Most people imagine opportunity as a single event. One big move, one perfect decision, one magical moment. But real wealth waves usually do not work like that. They unfold over years, which means the person who benefits most is often the person who begins early enough to let time do part of the work. Think about planting a tree. Everyone knows the saying, the best time was years ago. But what most people forget is that the second best time still matters. A lot. And waiting another 5 years because you feel late only makes the delay more expensive. And that is exactly how wealth shifts work. You do not need a perfect past. You need a better next move. That is the mindset shift buried inside this whole topic. And the fact that a wealth shift has already started is not a reason to panic. It is a reason to get serious. Because if the shift is real, then it is likely to play out over a long enough period that awareness today can still matter enormously. And once a viewer understands that, they stop asking, "Did I miss it?" They start asking, "What do I do now that I know?" So let's make this practical. If a huge wealth shift is already underway, what should a normal person actually do with that information? First, stop thinking only in headlines. Headlines are built to capture attention. Wealth is built by understanding long-term movement. That means zooming out. Start asking bigger questions. Where is money likely to flow over the next decade? Which industries may grow because of that movement? Which regions may attract more capital, demand, or affluent households? Which parts of my financial life are totally disconnected from long-term trends? Second, strengthen automatic investing. If you are not consistently putting money into productive assets, this is one of the simplest ways to gain exposure. Not because it feels exciting, because it keeps you in the game while larger economic forces unfold. Third, use long-term financial accounts wisely. Retirement and tax advantage systems matter because compounding works better when there is less drag and fewer emotional decisions. Fourth, build financial flexibility. A person with zero margin is often forced to watch opportunity pass by. Emergency reserves, lower unnecessary expenses, and better cash management do not just create safety, they create optionality. Fifth, learn where capital is moving. Not obsessively, not like a day trader, just enough to understand the broader pattern. Sixth, build skills that benefit from wealth movement. In some cases, the best financial opportunity is not a stock or a property. It is becoming more valuable in an economy where certain services, knowledge, and judgment become more needed. And finally, stop waiting for perfect certainty. No major wealth period feels perfectly clear in real time. If you wait until the story is obvious to everyone, the easiest part is already over. The goal is not reckless action, it is calm positioning. That is how ordinary people begin acting less like spectators and more like participants. A huge wealth shift does not announce itself with fireworks. It begins quietly. Most people ignore it. Some dismiss it. Many are too busy dealing with the immediate demands of life to notice what is changing underneath them. And that is exactly why these periods matter so much. Because by the time everyone agrees something important is happening, the people who were already positioned begin to look unusually fortunate. But from the inside, it rarely feels like luck. It feels like patience, awareness, restraint, steady action, a willingness to take the long view when the short view is noisy. That is the lesson. The next generation of millionaires may not come only from people who inherit massive amounts of money. It may also come from ordinary people who understand what wealth movement does to an economy and quietly position themselves while others stay distracted. That is a very different kind of story than most people are used to hearing, and maybe a more useful one, because it means the future is not only shaped by brilliance, privilege, or timing one perfect move. Sometimes it is shaped by something much simpler, seeing clearly, thinking longer, acting earlier. And if this really is one of those defining financial periods that only looks obvious in hindsight, then the question is no longer whether the shift is real. The question is whether you will treat it like background noise or the beginning of a completely different chapter. If this video gave you a new way to think about money, wealth, and long-term opportunity, then do not let the idea stop here. Because the people who benefit from big shifts are usually the people who keep learning while the story is still unfolding. So I want to ask you one question. Do you think this wealth shift is still early? Or do you think most people are already behind? Let me know in the comments. And if you want more videos like this, deeper breakdowns on hidden money patterns, market psychology, long-term wealth strategy, and the forces that quietly shape who gets ahead, then subscribe and stay with the channel. Because in a world full of noise, understanding the bigger pattern may be one of the most valuable skills you can build.